Now, let us continue to go to work as we analyze 10 of the top S&P 500 dividend paying positions, okay? We've done all the homework for you. Now, I need for you to write down these individual positions, for they will get you PAID. Perform the appropriate drill down on the positions themselves, govern yourself accordingly, and monetize the positions. Now, keep in mind, don't get greedy. Once a position has reached the threshold that you had set forth for your particular position that you take the money off the table. Do not sit there and wait or hope that the position is going to continue to rise. Take the money off, okay, and then reinvest accordingly. Utilize your trailing stops at all times to make sure that your profits are protected from downside and or market erosion. Okay? So now, family members, I need for you to take very, very copious notes, and let's take a look at some positions we're talking about that are indexed to the S&P 500 that will get you PAID. Okay, so now, the first position I want to give you, okay, and all of these positions, by the way, pay more than 3% per annum as far as a dividend. So they beat inflation, all right, which is vitally important. Now, the typical income investor who is retired needs dividend stocks that yield at least 3.5% to live off of those dividends. Now, unfortunately, the average S&P 500 stock yields just 1.9%. Okay? So would you like to care to guess how many S&P 500 stocks pay a dividend? Guess what? There are exactly 418 S&P 500 stocks to pay a dividend, or 83% of the index. Now, of those, only 66 have a current yield, okay, of 3.5% or greater. So, with the list of possibilities whittled down to just 13% of the S&P 500 stocks, my job is to cut out the best of those particular positions. Now, that's especially true when you consider that this list of S&P 500 stocks to possibly actualize now represents 1 out of every 6 stocks in the index paying the required 3.5% yield. So I have attempted to be as diversified as possible. And I've also attempted to make sure to include one stock from each sector plus 2 wild cards that I think have extraordinary capital appreciation potential in addition to their ability to pay a large wage. So let's get started. First position I want to give you is LyondellBasell. LyondellBasell, symbol LYB. Now, the last time I spoke about LyondellBasell was in October of last year. And at that time, the Houston-based chemical company stock wasn't doing all that well, down 5% through 10 months of the year. Now, its current yield is 4.5%. All right? Fast forward 7 months, and LYB stock has barely budged, up less than 1% since October. Throw in a 4.2% dividend yield, and we're talking about a 6% total return, beloved. Now, LyondellBasell announced its Q1 2017 earnings at the end of April, and they were a mixed bag. However, over the trailing 12 months, it generated adjusted EBITDA of $6.4 billion, or $4.9 billion in cash from operations, and $2.8 billion in free cash flow. And on the dividend front, the company announced May 24th that it was raising the quarterly dividend to 90 cents, bumping the current yield to 4.5%. LyondellBasell, okay, symbol LYB. Next position I want to give you is Philip Morris, symbol PM. Philip Morris has a dividend yield of 3.5%. Now, at the end of the day, many people are big believers that the cigarette companies are going to insert their way into the blossoming cannabis business in the next 2 or 3 years. And at the top of that list is Philip Morris International, symbol PM, who I see using this as a re-entry into the U.S. market, a market that had left back in 2008 when it was spun off by Ultra Group. Now, let's face it, cigarette companies are already massive free cash flowing generating machines. And cannabis, talking about that marijuana, would only ramp that up considerably. Now, recently, Philip Morris said it would spend $337 million to convert a Greek plant so that it could produce 20 billion more heat sticks each year for use in the IQOS device, okay, the electronic cigarette device type machine. Soon, burning tobacco will be a thing of the past. Apparently, the company is selling a lot of Marlboro heat sticks in Japan, making it the biggest growth area for Philip Morris. Philip Morris, symbol PM, to get your PAID. Next great dividend paying position for you to consider that pays a dividend quarterly is Ventas, symbol VTR. Okay? Now, we've already given you the reasons why monthly dividend paying positions are so sweet. And for those of you that are members of the ASK Wealth Institute, you've got a list of monthly dividend paying positions that yours truly has given you. Okay? So they're in the reference document section of our website. But now what I'm doing is I'm backing out a little bit more and I'm going to quarterly dividend paying positions, and I'm specifying those that are in the SP 500 for you. So now we're at the Ventas, symbol VTR. Pays a 4.6% dividend. Now, Ventas is one of the United States' leading owners of senior housing. The real estate investment trust also happens to be run by one of the best CEOs in the country, period. Ventas, symbol VTR, 4.6%. Next, Pfizer, symbol PFE, pays a 4% dividend, okay? And Pfizer is a particular position that, yes, it has underperformed both in its drug manufacturing, as you look at the company, Pfizer, symbol PFE, against its drug manufacturing peers. And the S&P 500 is almost certain to show that Pfizer has tended to fluctuate a little bit over the last 15 years. But here's what I also know about Pfizer. Pfizer had $13.9 billion in free cash flow in fiscal year 2016, a healthy 26.3% of its revenue. And it currently trades at 12.5 times cash flow. Okay? By comparison to Novartis, its next biggest peer by market cap, that trades at 16.3 times cash flow. Now, Pfizer is cheap, maybe perpetually so as well. But eventually, that free cash flow generation has got to create shareholder value. And Pfizer will indeed rise. Next position I want to give you as a great dividend paying position, dividend being paid quarterly, is Weyerhaeuser, symbol WY. Weyerhaeuser, symbol WI, pays a 3.7% dividend yield. Okay? Now, Frederick Weyerhaeuser, who was the founder of Weyerhaeuser, which trades under the symbol WY, was worth $85 billion in today's dollars, an astronomical sum that unfortunately did not make it to 2017. No matter, it's still an attractive business that's more than just the largest private owner of timberland in the United States, talking about the Weyerhaeuser. Weyerhaeuser also developed some of its land holdings into real estate communities, manufacturing building products, and invest in energy-related products across the country. Now, Weyerhaeuser decided to spin off, a portion of his business. And the name of that particular business is TRI Point Group. Now, TRI Point Group, which, by the way, trades under the symbol TPH, focuses entirely on home building. And Weyerhaeuser received $700 million in cash and $2 billion in TPH stock in the deal, which went to Weyerhaeuser shareholders on a tax-free basis. Now, since the deal's completion in July 2014, Weyerhaeuser stock delivered mediocre performance. However, year to date, it's still up 10.3%. Now, this next position is an abnormality in the retail arena. I'm talking about Nordstrom, symbol JWN. Nordstrom, symbol JWN. Pays a dividend yield of 3.5. Now, it's no secret that the department stores aren't doing well these days. It seems there's a daily dose of bad news in the media, including the prognosis of the department store's demise. While that might be the case for some department stores, for some reason, Nordstrom is still doing relatively well. Recently, it gained notoriety in the press for selling a pair of jeans for $425. That included fake mud to give them the working man look. Now, unfortunately, the concept went over like a lead balloon on social media. Now, while full-line stores are facing a challenging retail environment, Nordstrom's off-price rack stores and its online businesses are doing very well. In the first quarter, Nordstrom's rack store same-store sales grew 2.3% year over year, and online sales increased by double digits and are now accounting for 24% of its overall revenue. Okay? JWN stock is a bargain at this time, historically speaking. Next position I want to give you as a great dividend paying position is Garmin, symbol GRMN. Pays a dividend of 3.9%. Now, earnings growth drives share prices higher, and sure, dividend growth helps, but nothing can replace good old-fashioned earnings growth. And in its first quarter reported ending April the 1st, 2017, Garmin, and once again that symbol is GRMN, demonstrated very clearly that it understands this basic fundamental of investing. Now, while revenues grew 2% overall to $639 million, and that's gross margins increased by 380 basis points to 58.3%. Operating margins increased 160 basis points to 18.2%. And its net income, excluding a $169 million income tax benefit, grew 7% year over year to $99 million. Now, the company finished the quarter with $1.1 billion in cash and securities and no long-term debt. And while GRMN stock is around $52 plus or minus, is trading for 9 times cash, a very, very attractive multiple, family members. Now, Garmin isn't going to be a home run position. It's not going to be a home run stock, but it should deliver decent returns over the next couple of years. The next position I want to give you is PPL, and it trades under the symbol PPL. It pays a 4% dividend. All right? Now, PPL is a utility holding company based in Allentown, Pennsylvania. And PPL stands for Pennsylvania Power and Light. Now, the company got its start way back in 1920 when 8 Pennsylvania utilities with 62 power plants merged into one company. Almost 100 years later, that company is still going strong. Now, PPL has 10.2 million, I said 10.2 million customers in Pennsylvania, Kentucky, and the UK. It oversees business generating over 50% of the company's 2016 operating earnings of 2.45. Okay? So its overseas operations, okay, generated over 50% of the company's 2016 operating earnings of $2.45. Now, the company expects to grow earnings by 5% to 6% annually over the next 4 years, with dividend growth of 4% annually over the same period. Investing in $16 billion in its energy infrastructure over the next 5 years, PPL just continues to get stronger and stronger. Now, it's not a glamour stock, but it will get the job done and get you PAID. Next position I want to give you is Mattel. Trades under the symbol MAT, Mattel. And it pays a dividend of 6.9%. Now, when an S&P 500 stock has a dividend yield of 5% or higher, there's usually an unpleasant explanation attached, and Mattel is no exception. Mattel stock is down 19.8% year to date, and over the last 3 years, it has gotten an annualized total return of negative 11.2%, almost a mirror image of the upside to the S&P 500. Now, Mattel's net income in 2016 was $318 million, one-third what it was just 3 years ago earlier. And that was so weak, the company board hired former Google America's president, Mario Giordallis, to inject some life into its fledgling sales. Now, the company is likely to cut its dividend from its current yield in half to around 2 to 3%, reinvesting the savings. Along with that dividend cut, Mattel is expected to announce a strategic plan at its June 14th Analyst Day. Who knows? Mattel might merge with Hasbro. But what we do know is that Mattel stock hasn't traded at these levels since 2010. Please take heed. And the next and last position that I want to give you, okay, is L Brands, which owns Victoria's Secrets. L Brands, symbol LB. It has a dividend payout of 4.8%. Now, Leslie Wexner is in for the fight of his life, as L Brands, symbol LB, appears to have completely gone off the rails. Victoria's Secret, once the company's major breadwinner, is hemorrhaging business as I speak. And on May 17th, L Brands announced its first quarter earnings, and revenues declined by 7% to $2.4 billion, with same-store sales at Victoria's Secrets falling 12% over the same period a year earlier. And on the earnings front, operating profits declined 35% year over year to $209.2 million. And right now, owning this particular position is not for the faint of heart. Despite analysts having a contrary opinion of LB stock, analysts, however, some of which still don't, see its 2017 outlook for earnings of $3.10 per share to as high as $3.40 per share as awful, despite the fact that that's much lower than the $3.98 per share it generated in fiscal year 2017. Now, at the end of the day, this particular position is one in which everybody's betting on Les Wexner to fix what ails Victoria's Secrets. Family members, multiple positions that will get you PAID from dividend payments. You need to be careful and you need to pay attention to these particular positions. And when your profits are hit, take your money and run. Talking about that L Brands, symbol LB. We're also talking about that Mattel, symbol MAT. We're talking about that PPL, symbol PPL. We're also talking about that Garmin, symbol GRMN. We're talking about Nordstrom, symbol JWN. We're talking about Weyerhaeuser Company, symbol WY. And we're also talking about Pfizer, symbol PFE. And Ventas, symbol VTR. And don't you dare forget Philip Morris, symbol PE, and Liddell Basel, symbol LYB. All low-hanging fruit positions poised to get your PAID, because currently they are the top S&P 500 dividend-paying stock positions, poised to make you MONEY right in OW.